Hey guys, welcome back to another episode of How to Read Price Action in the Forex Market. With me, Simon Davis, also known as Zone Trader. I want to talk to you today about top-down analysis. What is top-down analysis, how you can do it in future in your trading. So I'm going to go from the weekly. So first thing I'll do is, like I said on previous videos, look where the market's been, where it is and where it's going. So where has it been? It's been here. So basically all the stops and liquidity has been taken from below here. So then I would, looking at this chart, this is how I would do this one. Stick a line up here. So we've got a PT, possible target, and a PT, possible target up here because they equal highs. So we already know that the market wants to push higher to reach PT, possible targets, which is liquidity. This could be an issue, this order here, possibly. So we'll have to reanalyze the market when it gets to this point here, because we could see a drop in the market from here because this is an order block, or it could shoot through. Who knows? We'll have to see when it gets there. We are on the weekly. So the reason why we've had an up week last week was because of this order here, which I spoke about in previous videos. This order block, it was unfulfilled, came up, took out stops here and here, and then came up from the order, took out the stops, came back down into the order. Institutions buying down candles and selling up candles. So definitely bullish. So we drop down to the daily. And here we have the reaction from the weekly order block on the daily. So the best way to get into this move here would have been waiting for it to touch the line, which is the weekly order block, dropping down into lower time frames to get a clearer picture of what's going on. So it reacted here and then crossed the hour candle, which shows that it's a slight break in market structure. The true break in market structure would be here in the up candle. As you see, it's broke structure, run stops and rallies, and you also see the pattern: accumulation, manipulation, and distribution. Another way we could have got in here was seeing the breaker. So this is a breaker. It's not the best one, but we got the up candle in the middle of the low and the lower low. So the breaker breaks the breaker, returns the breaker, returns to order, and then buy. So if you got in at the breaker, yeah, you would be in like 50 pip drawdown, you probably get taken out, but then you don't change your bias on a whim, and again you've got accumulation, manipulation, distribution. Some would say you have accumulation, manipulation up and distribution down. That's absolutely fine, but swing trading and the long-term trading is accumulation, manipulation up. You also have accumulation, manipulation down. You can do either or, depending on whether you want to be an intraday trader, swing trader, or a scalper. It doesn't really matter. But both are right. In the long run, obviously, the upwards trend wins on this one. And then you've just got super, after all that, now we've dropped into the weekly order block. We've had hourly breakers. There's another one here, which I was going to speak about as well, but I spoke about the one that didn't work first. So we've got a breaker here, so the last up candle before the down move, and you've got low lower low. So the breaker move is, I'll do this in a different colour. Blue thick. So the breaker move would look like this in simple terms. Low, lower low. Breaks it. Returns. And rallies off. So return to origin is here. And then you've got super clean and clear. You've got super clean and clear order blocks here, here, and even here, which is a fast return. But so we've got an order block, as we always say, it's the last down candle before the up move. Basically, institutions bought in that last down candle. So that's what you're asking yourself all the time. Where are the order blocks? Where are the breakers? Where are the stops? Where is liquidity? Liquidity is high, so therefore buy orders are going to start moving up to there. Retailers are going to think, oh, manipulation in the accumulation. They're going to think everyone's being manipulated, and it drops, and they'll sell into this move here. Unexperienced order block traders would be like, oh, I'll sell into this order block here, but you reach for the higher target. You have a bias in mind, which is bullish, a bullish bias. So you wouldn't take bearish signals if you've got a bullish bias, and you wouldn't take bullish signals with a bearish bias. So order block, order block, order block, stacking. Always say, guys, the market goes breaker, order block, order block, order block, order block, breaker. So we wouldn't ever look to sell this market until we see a clear breaker. It's super simple, guys. It's super simple in hindsight, and it's simple in forward sight as well, really, once you've got your mind this clear and focused. And when you've got accumulation here, manipulation into the order, distribution for the day. Accumulation, manipulation, distribution inside of an order block. Super nice move, which is reliable. We could see a drop below here to take out these stops. Mark with lines, mark with boxes, whatever you want to clear it, make it clear with. Mark with X's, mark with money, whatever you want to do. So we could see accumulation, manipulation into the unfulfilled order block. It's been fulfilled fast, but it's not been fulfilled in the long run. Who knows? But we are above a breaker here, so it's dropped down to 15-minute. It's not the clearest breaker, really. So we've had a nice move today, which would have been accumulation. It's getting messy, but if you keep up, guys, you'll learn a lot. Accumulation, manipulation, distribution for 60 pips, well, 50, 60 pips for a nice Monday morning. But ultimately, target for the week. Target for the week. Target for the week. We're climbing higher. So just in that little move up, we've learned so much: order blocks, breakers, everything really, all the lingo. You see turtle soups as well, so you've got a run on stops. You can call turtle soups bear traps because all the bears are trapped. That helps in that. Internalize the market, because it's all about the way you internalize the market, guys. Is how successful you'll be. Is how successful you'll be is the way you internalize the market. How clear your mind is when getting onto the charts. Having all this in your subconscious mind: break, turtle soup, order block, breaker, run on stops, liquidity. All this lingo is a way to read the market with an institutional mindset. So we're probably not going to come down here to here because we've already ran the stops here. So chances are we're going to rally off this order here. Who knows? Wait for extra confirmation. But it is looking tidy up here, equal highs, and then on the higher time frame is equal highs as well. So we've gone looking at bullish, so we'll look at bearish on the way down just to finish off this video. We've gone bullish, bloody hell, all the bullish signals, all the bullish signs under the sun here to take in, to learn, to digest, to use in your trading going forward. So I'm just flicking around to see the nice bearish movements. So we have an order block here. I'm not going to clean the chart, it's going to carry on. So we have the order block here, fast down move away from the up candles, the order block returns to origin here, enter a sell. If you want to be more confirmation, you wait for it to break the structure, which would be here. So say for instance you did get in, you'd lose, but so what? Losing is a part of trading. Like everybody loses in trading, everybody loses in trading. Everybody. So say you got in here, you lose 30 pips, so what? Who cares? Doesn't matter. You look for your order block. Inside of this order block, price rallies away, comes back into it, get in here, 60 pips, get out. It lingers around this order block quite a lot because it's reaccumulating for this massive drop. Once it's dropped and broke structure, then we're in for more high probability trades. And along this line as well, you also see the order block, which gets returned into accumulation, manipulation, distribution, and manipulation, distribution, yes, on the short side, but also on the long-term side is accumulation, manipulation, and distribution for the long term, down into that weekly order block, and then we get the rise. So guys, I hope that's made it clean and clear for you. You've learned a lot. You've took loads of notes. You can always go back and watch this video again. If you want more insights into the Forex market, stay tuned. Subscribe to the channel, because I'll be doing more of these definitely in the near future. If you want to check up on what I'm doing on a daily basis, I don't always post on there on Instagram anymore, but if you want to check up what I'm doing, there's so much information, psychology training inside of my highlights on Instagram, which is at Zone Trader. And always guys, remember these 4 things. Have patience to wait for your trades, to hit its target, to wait for confirmations. Have discipline to follow your rules, and always manage your risk. I've been Simon Davis, Zone Trader, signing off.